Welcome back to the Banking on Data podcast, powered by Lumio Solutions, where we invite experts from across the community banking and credit union industry to share best practices for enabling risk-informed business intelligence. Hello, I'm excited to have Beth Nilles back with us here today for the impromptu part two that you teased up in our last conversation, where you indicated that you had been doing some work on a program risk assessment related to AI. So in our last conversation, we talked a bit more about how financial institutions can lean into this AI journey responsibly, and how do they evaluate risks, track their controls, and then be able to self-assess where they are on this journey. And in that conversation, you gave us a little teaser at the end of it, Beth, when you talked about program risk assessment. So we're happy to have you back and looking forward to exploring that in a bit more detail here today.
Thank you. Thanks, Ed.
All right. So before we get into that, specifically what you've been working on around the AI program risk assessments, take half a step back for a second. What is a program risk assessment? When is it typically used? And how do financial institutions use it? And then let's come into the AI use case after that.
Sure. Well, program risk assessment is a top-down view of risk in a program. Let's call it your fair lending program or your BSA AML program or something like that. It's the whole event, and it is at that top-down look. So what you're looking at is your total risk or your quantity of risk. And then you're adding in how well do you manage that risk, your quantity of risk management, and together you get an overall risk rating for a particular program. You're not looking at a specific risk and the four controls that are associated with it. You're looking at it at a higher level, the 30,000 or 40,000 foot view, and evaluating it for how well you're doing against your risk appetite in that area.
Okay. Given that explanation or description, right, of what a program risk assessment is, what triggered you to say now is the time that financial institutions should be applying that, right, program risk assessment methodology to the AI space, right? Right? Why now?
So AI is moving at a velocity that I have not seen for any type of technology before. And more you're seeing it in all of the tools that you get from vendors. I mean, you see it with Copilot, you see it with GPT, Google. Everything has an AI component to it. And a lot of vendors in the fraud space, in the AML space, in the lending space are using artificial intelligence and model, or excuse me, artificial intelligence and to enhance their tools and make them more valuable. With that comes a risk that banks need to educate themselves on and then prepare for and monitor and evaluate. And it seemed like the perfect time to say, okay, particularly for the size banks that we tend to focus on, they don't have large risk offices often. They could use a little help. So we thought it would make a lot of sense to provide them with a tool that they didn't have to go and invent themselves for this.
Yeah, and we talked a bit about that in our last conversation about how it's daunting if you have a blank sheet of paper and you don't know where to start, right? In the bottom up example that we were talking about when we were talking about the risk and control self-assessments, we were talking about the fact that, right, there's OCC guidance, there's the NIST 2.0 framework, there are methodologies in place that then can inform what a bottom-up tool would look like. And I know you used a lot of that intelligence in the tools, the bottom-up tools that you've been part of constructing. This, it sounds like it's the same concept, looking at it from a top-down perspective, and then equipping folks with an assessment tool there that means they're not starting from scratch.
Right. So if you take it at its basic, you're like, okay, where where should we be looking to evaluate these risks? And like you said, we looked at the NIST AI framework. We looked at the OCC framework. We looked at um, the FDIC framework, and we're like, okay, now if I had to measure my risk at a high overall level based on that, what would I look at? What are the attributes that I would look at? And some of the things that are in there are regulatory, oversight. I can't remember them off the top of my head, and I should. I just finished doing it. But then within each of those attributes, I'm like, okay, what in here, how are we going to measure this? So I've got some metrics in there. Some of them are qualitative, particularly for smaller institutions who haven't yet started gathering metrics, but it'll give you an idea of where you should maybe think about gathering metrics as you develop your feedback loop. So I think it's a really good tool maybe to do once when you first start thinking about adding AI in your institution, so you understand where you're going and maybe how you should be thinking about your risk, in
Mm,
addition to the frameworks and what they tell you to look at. And
got
then
it.
as you grow over time, you can add in metrics and mature your risk assessment as well.
So it's not a set it and forget it. It is right. There is a starting point, and as we talked about previously, this is moving quickly, and the feedback loop is going to be right, rapid and iterative there. And so, right, the top down metrics you look at today may evolve in 3 months, 6 months, certainly a year from now. And so that program risk assessment will should be a living approach, or should be a living document, if you will, and it should evolve over time.
Yeah, and I will say this, most of these program risk assessments you would see a bank do on an annualized basis. And in some cases, you would see them do it maybe semi-annually. If you have AI that you have customer facing, that customer facing needs to be evaluated pretty often for fairness and bias and drift. I would say start doing this semi-annually. And the more AI you get in your organization, you might even do it quarterly or more frequently than that. This is one that you don't just do it on an annual basis. You want to do it much more frequently than that because of the velocity of change within models and how AI is just developing quicker and faster in real time.
All right, I think you might have answered this question indirectly in one of your earlier comments, but I was going to ask who should who should utilize a program risk assessment as it relates to AI? Where a financial institution that is at what point in their AI journey?
I personally think you should do it right up front. You should, because one of the things you're going to do a pre-risk assessment or a pre-release risk assessment to make sure that you have the right tool, that you're pursuing the correct things. This is you could almost do it as a readiness start, right? Almost like a maturity framework, but not. It tells
Right.
you where you are and maybe where you want to go because you're comparing it to that risk appetite that your board has set.
Right. All right. I think that we've hopefully given people some things to think about here. This is I like the idea of a readiness view, right? Thinking about evaluating, right, what you're about to embark upon. I think that most institutions probably are doing something already in this area, so it's a bit naive to think that, right, people are at zero and this is going to be done before they embark on anything. But it's not too late to start, right, and to conduct an assessment like this. And then as you indicated, that will be something that you'll want to update on probably a more frequent basis than you would a traditional program risk assessment, probably quarterly, certainly semi-annually. Whereas some of your other program risk assessments, perhaps that's more likely to be annual. And then evolve it over time, right? You talked about a set of metrics and how to measure them as being part of a program risk assessment, and acknowledging that what you have on day one is going to be different than what you are going to want to evaluate on, day 160 or day 365.
Definitely, definitely.
All right. Well, thank you, Beth, for helping us unpack that teaser which you left us with last time. We appreciate this and are excited for folks to lean into this AI space and do it responsibly, right? So that they can make risk-informed decisions and actions.
My pleasure, Ed.